An ETF, or exchange-traded fund, is a type of investment vehicle that holds a collection of assets, such as stocks or bonds. ETFs are traded on stock exchanges, and their price fluctuates throughout the trading day based on supply and demand. ETFs offer investors a way to diversify their portfolio, as they can hold a wide range of assets, such as stocks, bonds, commodities, and currencies. They also tend to have lower expense ratios than mutual funds, which makes them an attractive option for cost-conscious investors. ETFs are also more tax-efficient than mutual funds, as they generate less capital gains and dividends tax. ETFs can also be sold short and bought on margin, features that not all mutual funds have. Types of exchange-traded fund: Index ETF, Gold ETF, Leveraged ETF, Bond ETF, Sector ETF, Currency ETF. Several factors to consider when identifying a good ETF. Expense ratio: ETFs have an expense ratio, which is the annual fee that the ETF charges to cover its expenses. A lower expense ratio is generally better. Liquidity: it's important to look for ETFs with high liquidity, which means that the ETF has a high trading volume and can be easily buy and sell. Tracking error: ETFs are designed to track the performance of a specific index or market. Tracking error measures how closely the ETF's performance matches its benchmark. Lower tracking error is generally better. Performance: look for ETFs that have performed well over the long term. Diversification: ETFs can provide diversification by giving investors exposure to different sectors, industries. This can help to reduce risk. ETF issuer: ETFs are issued by companies which can have different level of reputation, history, and financial stability. Exchange-traded funds, ETFs, are investment vehicles that are traded on stock exchanges, similar to stocks. They consist of a basket of securities, such as stocks or bonds, that track a particular index or asset class. Some pros of ETFs include: diversification: ETFs offer investors the ability to diversify their portfolio by investing in a variety of securities at once. Low costs: ETFs generally have lower expense ratios than actively managed mutual funds, which can save investors money over time. Flexibility: ETFs can be bought and sold throughout the day, which allows investors to take advantage of market fluctuations in real time. Some cons of ETFs include: lack of control: because ETFs track a particular index or asset class, investors do not have control over the specific securities that are included in the fund. Risk of overconcentration: some investors may be tempted to invest too heavily in a specific sector or index, which can lead to overconcentration of risk in their portfolio. Complexity: ETFs can be complex and may not be suitable for all investors, particularly those who are less experienced or have a limited understanding of the underlying securities. It's worth noting that ETFs have grown in popularity in recent years, but it's still important to understand the potential risks and benefits of this investment vehicle before investing.